there! Welcome back to our channel. Today, we're diving into an incredibly important topic for anyone interested in finance or business. We're talking about capital budgeting! Now, before you start thinking this is going to be a dry finance lecture, let me assure you that it's not. We're going to make this engaging, fun, and relevant to your interests. So, let's kick things off with the big question. What exactly is capital budgeting? Simply put, capital budgeting is the process that companies use to decide which long-term investments or projects they should pursue. It's like planning your future expenses, but on a much larger scale. Companies need to allocate their resources wisely to ensure growth and sustainability. Now you might wonder, why is capital budgeting so crucial? Well, imagine you have a limited pool of resources. You can't invest in every shiny project or opportunity that comes your way, right? Capital budgeting helps businesses evaluate potential investments, estimate future cash flows, and assess the feasibility and profitability of projects. This is where you, as a future entrepreneur or investor, need to pay attention. In a nutshell, capital budgeting ensures that a company is investing in projects that align with its long-term goals and are expected to yield positive returns. Let's think of it as a strategic map that guides companies toward their financial success. Now, let's get to the methods of capital budgeting. There are several techniques that businesses use. One of the most common methods is the net present value, also known as NPV. This method helps evaluate the profitability of an investment by calculating the difference between the present value of cash inflows and the present value of cash outflows. Ever heard of the internal rate of return, or IRR? That's another important method. The IRR indicates the discount rate that makes the net present value of a project zero. Essentially, it helps businesses determine and compare the efficiency of multiple investments. Wouldn't you want to make sure your potential investments have the best returns? Then there's the payback period method. This one's focused on how long it takes to recover the original investment. It's simple and straightforward, but keep in mind, it doesn't measure overall profitability. Just imagine waiting for your investment to pay off. Every second counts. Let's not forget the Profitability Index. This is a handy tool that helps us understand the relationship between the costs and benefits of a project. If the index is greater than 1, it's a good sign. But there's a little catch. It works best when comparing total costs instead of individual projects. Now that you have a taste of these methods, why don't you think about which method makes the most sense for you? Are you leaning towards NPV, or do you find IR more appealing? I'd love to hear your thoughts in the comments. As we chat about capital budgeting, let's not shy away from addressing its limitations. You see, while capital budgeting is essential, it does have its drawbacks. One major limitation is the assumption of accuracy in cash flow estimates. What if your projections fall short? Another limitation is the inherent uncertainty of long-term forecasts. Market conditions can change in the blink of an eye. Additionally, capital budgeting processes can be time-consuming and often require a lot of preliminary research and data analysis. But don't let that discourage you. While these shortcomings exist, understanding capital budgeting helps businesses make informed decisions. It helps mitigate risks and opens the door to more strategic planning. Before we wrap things up, let's do a quick recap. We've learned that capital budgeting is all about making those crucial long-term investment decisions. We've explored its importance, dove into various methods like NPV, IRR, and more, and acknowledged the limitations that come with it. So, what's stopping you from diving deeper into the world of capital budgeting? Share your thoughts and experiences in the comments below. And hey, if you found this video useful, make sure to subscribe to our channel for more insights and tips. Trust me, you won't want to miss out. Thanks for tuning in, and until next time, keep those financial aspirations alive.